Buyers Club. Welcome to the market update. Today's January 24th, 2019, Friday. Market has been closed for about an hour. So let's continue with our weekly analysis here. Let's start with Spider, Diamond, Qs, Russell, Transport, Banks, and the semis. Hope you guys had a good week trading this week. It has been pretty lethargically marching higher move since early October, right? We pretty much been grinding higher every single day. And for the first time, I think this is the first time we're seeing, this is a 0.89%. I think we did see something similar. I think on this day, we saw something similar there. But it's been pretty fascinating to witness the market pretty much going higher every single day, and it's making it very difficult for many people, because if you're coming into the market late because you wanted the market to you wanted the quote-unquote danger to subside, well, the market is not giving anything for latecomers to accumulate positions. And it's tough for bears because obviously they're getting wiped out, or they're already wiped out. It's difficult for many longs because they don't know when they should be closing out their positions and when they should be buying the dip. And what I've been talking about, and if you've been following me in my videos here, that this is not any of these levels is not a level to heavily accumulate longs, and you should already been buying the dips. If you missed here, there were 3 other chances pretty much all throughout the summer in 2019. There were many chances here and here and here. So you should have been already positioned yourself before the breakout. So you never want to trade based on a breakout or after the breakout. You should always already position yourself before the breakout, so there you have more control. Because once you start chasing a breakout, you have less control, right? Because let's say if you chased it here on a breakout, you thought that, okay, so market did break out of this move, and it's tough to chase it here because the market already moved this much. Though if you're already long term, if you maybe got long here with the long term positions, then if you held through this pullback, I think you're doing okay. But there's always been, you're always be second guessing yourself, is that, well, market has, because it just given the fact that just throughout 2019, we see certain move like this, and you saw the market seeing tankage here. So market has conditioned traders to feel that way. So yeah, so when we saw this move, I think a lot of traders are wondering if we're going to see another tankage like we saw in May, July, and September. And it's almost like a reverse psychology. That's what everybody's thinking about. That's what everybody's fearing about. That's what everybody's talking about. That's what everybody's preparing to do, and then market just kind of comes back up and doesn't look back. So, and now I hear people saying the higher it goes, the faster the decline, or the more the decline. Actually, it's the opposite. The higher it goes, especially for the fact that we've already seen multi-year base, right? So we can label this as a multi-year base, right? We saw the multi-year base where market didn't go anywhere for about 1.5 years, right? Very similar situation we've seen in 2015 and 2016. So after you saw a stock market, you saw S&P 500 breaking out of this, and very quick check of that rising pivot, right? You saw that quick check right there very quickly. It took just 2 days, not even 1 day, and then got right back up. And then market continues to thrive like this, and it's been extended, quote unquote extended, for the last 4 months, right? And everybody's been throwing this fear and greed index, right? They're already throwing that up here, and market kept going higher. And now what you think market should do is a huge decline, correct? Right? A big pullback. Market just went straight up for 4 months straight, right? October lows. We're getting near the end of January here. So we got October, November, December, and January. That's 4 months, right? So market pretty much went straight up for 4 months. So what goes up must come down, right? And because market went up pretty much every single day, so there should be some big, like, you know, it's almost like people use this analogy like, you know, like a band, right? You're stretching a band, it should come right back down. That's actually not true. And you have to understand, you know, you have to understand the condition, the environment, right? The environment, the atmosphere that we're in. Obviously, if market has been running, right? Market has been in an uptrend for like 2 years, right? Let's just say market has been uptrend for like 2 years, a year and a half. And then we saw something like that. That's definitely a warning signal. That's definitely very, very extended. But for the fact that we've just came out of, again, I'm going to say this again, year and a half of consolidation, and you see a breakout this strong, any sizable dip, you should be thinking about buying. And again, I said this last year, and I'm going to say it again. I don't believe we're going to see correction, not more than 4 to 6%, maybe 8%, but for sure, I don't think we're going to get anything close more than 10%. I think the worst is going to be 8%. This entirety of it. We will see grind, we'll see consolidation, we might even see shenanigans. When I say shenanigans, I mean we might even have one day 3% pullback day where this thing gaps down 1%, right? And then 2% flush day or something like that, right? But if you just measure it from the peak to its correction move, I don't think it's going to be more than 4 to 6%, maybe 8%, but no more than 10%. Entirety of this year. So if we see anything, any kind of sizable dip this year, it will be an opportunity to buy, right? And you know, I said it last week, that I've been saying it the last several weeks, that as the market moves higher, this is not the time to start accumulating. You should be already accumulated, right? And this is a time to start trimming those positions. Not close out everything, because I am bullish the entirety of this year, towards the end of this year, with the shenanigans and ups and downs and consolidations and all that throughout the summertime. Probably starting in March. I'm thinking about March, maybe starting about March or so, March, and then like May and September, something like that. We'll have up and downs throughout the summertime, and then market probably starts to go again in the fall. So I think any kind of sizable pullback, which we're going to see going forward, will be a buying opportunity. It will be better for you not to try to short it, but trying to and prepare to buy that dip instead of trying to short it. It will be easier for you trying to buy that dip instead of you trying to short it at the top. Because how many times do you really think people trying to short it here? This is the top, this is the top, this is the top, this is the top, this is the top. You know what I mean? By the time the pullback actually happens, it reverses so quickly that it's very, very difficult for any short sellers to properly profit or properly lock in that gain, right? So that's what I'll suggest. And if the market continues to grind higher from this point on, you continue to trim those long positions, especially in the sector, you know, like chip sector, technology stocks, and large cap stocks that has been going up quite a bit, like Spider, Diamond Qs, right? S&P, the Dow Jones, and the NASDAQ. They are well above the all-time high area, right? But we have the small caps and the transport lagging quite a bit. And I believe, and this is my proposal to you, that the money rotation is going to occur, and there will be people taking money, some of the money out of the large cap stocks and tech stocks and chip stocks, and move that money into transport and the banks and small caps. And when that happens, you'll see the S&P and the Dow and the NASDAQ continuing to be propped up. So that's kind of my overall take of the market and how you should approach this market going forward. Let's look technicals here, looking at more of a shorter term. Look, you see that that's the 10 EMA that I put in here. You see that? That's a 10 EMA setting it low. So 10 EMA here, 10 EMA there, 10 EMA has been acting as support for quite some time. And this is a very, very bullish sentiment because you can see only time we saw 10 EMA getting breached, it was back in December 3rd, 2019. And that 20 EMA was right there just to support it and get right back up. So you got 10 and 20. I think they're both setting it low if you want to put that in your... yeah, so we got exponential 10 EMA setting it low and oops. And then we got, actually it's 25. Okay, so we got exponential 25, not 20, setting it low. So we got 10 EMA setting it low. We got 25. I think I did 25 to accommodate that wick because it's 20 EMA still works, but it comes right on that body. 20 EMA still works because it's right on that body, but I want to accommodate that wick here, so I changed it to 25 EMA. So we got 10 EMA and 25 EMA. They both setting at low, right? So you can put that on your chart and kind of watch it for the short-term sentiment perspective. The pullback, this gap was just filled, right? And after that gap was filled, you can see we've got a little bit of dip buying opportunity or dip buying activities happen today, and that is a level that coinciding with the 10 EMA, right? So you can see you got the 10 EMA there. So as of today, as of now, we want to give benefit of the doubt to the buyers in the micro term as long as we stay above the rising 10 EMA. In the minor term, many meet at 25 EMA. So we got those two levels there. And you can see there's a gap here, right? So there's a gap area, and in that vicinity, we have a 20 EMA residing just below that gap. So if we do continue lower next week, that 25 EMA is likely to become very strong support, and that's probably going to push this back up to this all-time highs if we do come back down. And I don't know what's going to happen at that time. We might see this thing coming back down, kind of scare you to think there will be a trip. You know, I kind of feel like that might happen. Like goes up, comes down, goes right back up, kind of make people think that there's a head and shoulder or, you know, double top formation, maybe briefly come down a little bit and then goes right back up to 340, right? So because my next target is 340, my second target 330 was hit this week. And so let's see how it plays out coming week, next week. Currently we are seeing this price staying above the 10 EMA, and so we may bounce from here. But if we lose that, we got the gap area and we got the 20 EMA residing just below that gap area. And it's going to provide pretty solid and strong support in the short term, in the minor and micro term. And we may see a bounce just to retest the highs, and we have to reassess the situation at that time. So that would be what's going on right now today. And I just want to iterate something real quick here on the hourly chart. And you can see this is why you want to make sure you wanna track gaps. Remember, I did this for you guys for many years, and you know, I tweeted out even today that gap was filled. A lot of time when gap gets filled, it does act as resistance. This is why it's important that you track gaps, even though the gap was filled here. This is 65-minute chart, and we did pop, but quickly came back down, right? And then now the gap is filled, right? And you can see already we saw dip buying activities here. And we do have some kind of, again, this is 65-minute chart. I wouldn't put too much weight onto this. We have some kind of an evening star reversal looking like candles. Last three 65-minute candles. We got the bearish candle. We got that kind of spinning top doji looking candle with the little small body but long lower wick. And then we got that bullish candle, but it's not up here. So we got kind of weak, less potent evening star reversal. For this evening star reversal to confirm to the upside, it will need to at least get back above this candle body there and then do something like that. So I don't know, if I see something like that, I always tweet things out at 2K Kim, and I've been tweeting 65-minute chart today, talking about the gap here. The gap was filled, and then we slightly got up here, but it tanked, right? Because a lot of times when gap gets filled, it acts as resistance, right? Now this up, because this was down gap, right? So down gap act as resistance. Well, the up gap act as support. And that's what we saw here, right? This gap was filled, right? And then acted support, and that's what we saw some buying activities towards the end of the day today. And again, with the evening star reversal looking like candles, 3 hours here. If we continue higher, then potentially this could get up to 332. For this to confirm, we need to see this thing breaking above 330 and holding above that. Until then, it's just evening star. No, it's not evening star, it's a morning star because it's bullish. Evening star will be if this, sorry about that, if this is happening upside down at the top, right? Then there will be evening star. So it will be a morning star. It doesn't even matter, but that's what they call it. There will be morning star. Like, I don't know if I can find any kind of example here. I don't think there's an example. This is an island bottom, right? I'm trying to see if I can find a morning star reversal example for you guys. Something similar here. So it's a little bit, it has morning star reversal properties. You can see bearish downturn, and then we saw that long lower wick with the small candle body, and the next day you see that bullish candle, and you need to get above this here for it to confirm, and then you can see it rose for a couple of days there, right? So that was morning star reversal. So we have something like similar, right? So you can see for this, again, for this confirm, it needs to get above 329. But then again, we'll have to see how it plays out early next week. And if I see that morning star reversal confirming, I'll tweet things out at 2K Kim. But again, if not, we break below the 10, then definitely the 25 EMA setting at low is the level to watch, which is 323. And that's the level coinciding with the gap area. And I believe that it's going to provide us pretty strong support. Once we come here and fill that gap, we're going to go right back up. It will be more bullish though if we come down, it doesn't fill the gap, and we go right back up, then pretty much we'll probably clear above it. We're probably going to clear above it and make new all-time highs. Let's quickly go to diamond here. Very similar sentiment. Only thing is that diamond, we have not filled. Did we fill that gap? Funny, there's no gap. Where's that little, because there's a little gap there. I guess I was looking for that gap. I don't know where that gap is. Huh. I don't see it on my 65-minute chart. There's no gap here. Oh, is that? I don't. Oh, okay. I see it now. I see it. It's right here. Right here. It's that. It's right here. It's this one. Right. Price closed here. It gapped up here. So that gap, it still remains open on diamond. Actually, when the gap doesn't get filled completely, it actually favors the bullish aspect of the price action when it doesn't get filled completely. So it's a little bit different situation here. Just a very little. We got a little bit more bullish sentiment, just a little bit on the diamond in the very, very short term. But I think same logic applies on the diamond as well. Qs though, we're way above that gap. We're not even retesting the 10 EMA. Very, very, very bullish sentiment. I mean, way better than Spider and Diamond, right? Because Spider came down, retest the 10 EMA, and filled the gap. The Diamond retest the 10 EMA and quite didn't fill the gap or retest the gap area. Well, Qs have not even yet retested 10 and not even retesting the gap area. Very, very much more bullish. But same logic applies here, and see how it plays out early next week. Let's go to Russell 2000. Russell 2000, we're retesting the 20 EMA already on the Russell 2000. We have this gap area. You know, I want to annotate that level because I think it's gonna be an important level. I actually think there's a good chance that Russell can come down, retest gap, maybe even fill this gap. If we fill the gap, 159, maybe even good level to buy that dip if he fills it. But we are currently retesting 20 MA, and we're much lower as far as the sentiment is concerned in the short term, because we talked about our spiders retesting 10, diamond retesting 10, Q's not close yet, haven't even touched 10 EMA. Russell 2000, not only it broke through the 10 EMA and now retesting 25 EMA. So it's a bit more bearish sentiment here. You can see today it's down 1.23% versus the S&P 0.89%. So 162 is the next support, which is a gap area. But if he comes down and 159, I think that's a pretty good level to buy that dip. Even like if he comes down to 159, 156, pretty good level if you want to accumulate some Russell 2000 there. Let's go to transport. So transport's been kind of flirting around in this area, right? This is the breakout level. So we're like kind of like hanging around. Like we initially made a high, but trying to pull back, and we can see we're finding support at 25 EMA. And so I think it's a little bit tricky situation if you're not trying to time it perfectly, because sometimes you make initial breakout kind of look and then it pulls back deeper. Because a lot of times people chase it, maybe they'll place their stop here, right? So sometimes the market wants to do like here, like below that low. Sometimes what the market will do, come down and take your stop and goes right back up. So keep it in mind, there's a chance it might come lower. If the market tumbles next week, transport could get lower before going up. This is why you never want to chase it. You never want to go long on a breakout. You should already be on a position. You should already position yourself in it, like here, 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 here. And so when it goes up, you can kind of hang around and see what it does. And if it pulls back lower, maybe you buy that dip one more time, and then you finally can enjoy the ride, right? Instead of trying to go and chase that. Because remember, I always say that chasers get burned. Market loves to punish the chasers. Let's go to XLF. And have you ever noticed, like every time when you chase something, like you're anxious about it. Like it doesn't matter if it's a market or if it's like anything. Like you chase women, right? You chase anything in this world, you get nervous. You know why? Because when you chase something, you're giving away the right to control. Do you understand what I'm saying? Like, for example, like if you chase high, the high that you're chasing, that thing controls you. You no longer can control your own life because you chase the high and then the high controls you. You chase women, well, that girl's gonna chase you. You'll do anything for her and she'll just use you for whatever entertainment she want to get out of you, right? And you chase a stock, you're anxious because now you chased it after a move, after it broke out. Now you're like, wow, now you're nervous that, you know what I mean? Like you're like, wow, what is the market is gonna do? And you don't know where to put your stop at, and you don't know if you should add more. You know what I mean? You're just always in an anxious state, because when you chase anything in this world, you're giving away the right to control. You cannot control anymore. The best way is wait for the right setup, always. And you should always already be positioned yourself, so when the market breaks out, you have full control. Why? Now you have all the options for you. Because if you've been accumulating and you positioned yourself already, when it breaks out and goes higher, you have a full control. You know why? Because now you have option. What are you going to do? Are you going to hold? Maybe you're going to close out some. Maybe close 1/3 of your positions. And then it pulls back. What do? Oh, you buy some more. Or you wait. You have so many options. But let's say you chased it. Now you're like, you have no options. Now you're like, okay, what am I going to do? Like if it pulls back, like what are you going to do? Like you want to buy more? Well, you're nervous to buy more because, well, you bought it here. And then you place your stop gets taken out, it goes back without you, and then you chase it again, it pulls back. And don't ever chase anything. Don't ever chase money, don't ever chase fame, don't ever chase high, don't ever chase women, don't ever chase stocks. Don't ever chase. Always wait for the right setup. Wait for right opportunity. But when the opportunity rise, when opportunity present itself, a lot of times it's also difficult to seize that opportunity. Sometimes you have to take a risk. Sometimes you have to go for it. A lot of times what people do is when the opportunity presents itself, they actually pass it because they're scared. And then later on, similar opportunity comes, but this one seems easier, right? Like it seems easier, like it's less risky. A lot of times those are the ones that's gonna get you, right? Those are the ones gonna get you. The real opportunity when it comes, when it actually comes, it actually is scary. And this is where a lot of people be like, yeah, I don't know, it's very scary. A lot of people be like that, not just in stocks, but in business opportunity or any other relationship opportunity, any opportunity. It's like, I don't know, you know. So you always want to position yourself before the breakout. You always want to, you don't want to chase it, because once you position yourself early, then you would have full of options what you're gonna do once the market moves higher. And I get it. So like I get it. Like you're scared. Like, well, okay. Like how do you know when to go long? Like I say, yeah, I want to go long these pullbacks, and I'm not saying like go long right at the low. Like no. Like I think I started accumulating calls. Like I got like here. Like I went long here. Well, first one, and then like I bought more here, and then like I've added here. And then like I think I waited till buy. I didn't like I can't. Nobody can find perfect lows every single time. That's not what I'm talking about. Vicinity, right? The vicinity, right? And people ask me like, how do you know those things? How do you know those levels? Obviously, I can't explain everything, my process in this video, and you know what I mean. It just and go back and look back. I don't know. Go look my market update videos. You know. They're all dated, so you can see what I was talking about in these levels, right? And you can see what I was talking about on semiconductor back in here. I mean, this Fibonacci I drew back in what was that? Yeah, like May, and that this will be a buying opportunity, right? We talked about that, remember? So obviously, if I could make it short, you first want to understand the macro trend of this market, and also have to understand psychological aspect of it. And obviously you also have to understand where the economy is going, not what you hear, not these geopolitical, these news that you hear, what the Trump is doing, not those things. That's not what I'm talking about. Looking at really, really long term, because these are all short-term things, right? These are all short-term things that happens all the time. Always something happens in our life. There's always something happens in our market. There's never a perfect condition in the market. Something's always going to go wrong. Something's always a little bit negative. There's always. Did you know that your body always have cancer cells, but your immune system kills it every single day? So are you going to tell yourself every day I'm going to die today? No. Right? You're not going to tell yourself you're going to die every day. There's a cancer cells every day. You just say your immune system just learn to kill it so that you can be healthy. So just like that, every single day there's something going on in the market. Every single day there's always a risk, right? Our whole life is risk. You don't know what's going to happen today when you get in your car, right? You don't know. But we take a risk every single day when we live. We're such a fragile being as a human being. We can die anytime. Disease, some natural disaster, somebody come kill you. Something, you know what I'm saying? Like we risk our lives every single day, but when it comes to the market, everybody's always so freaking scared. That's what I mean, right? So my process is obviously when you see a steep decline, first you have to assess the situation. Well, is this going to be a crash? Is it going to be a recession? Or is this a pullback? Is this a correction within a primary term uptrend? Once I come to a conclusion that it's an uptrend within a primary term up, or it's a correction within a primary term uptrend, then I start to proceed with the buying the dip. And then when the sentiment improves, and then when we see a pullback because the market does not go straight up, then I proceed to continue buy that dip. And then I am already positioned myself when it actually breaks out. I have a full control. Now I have a tons of options. What do I do here? Am I going to close out some here? Maybe I decided I'm going to hold everything. And then when it pulls back, I'm going to buy more. Wait for next move higher. You see. But if you're chasing it up here every single day, like, oh my God, what's the market going to do? And then like when the market goes up, you're like, yes, You have so much like adrenaline rush, right? Oh my God, yes. And then when market pulls up, you're depressed, right? When market goes up, you're happy. Your market pulls up, you're depressed. Like every single day, up and down, up and down, up and down, like anxious, nervousness, just going through so much emotion every day, because when you chase something, you give away the right to control, and therefore you're gonna suffer with anxiety issues and all kinds of issues, right? So you always want to go against the crowd, what everybody's talking about, what everybody's saying. So I would recommend, refrain from watching CNBC, Bloomberg, MarketWatch.com, Yahoo Finance, and things like that, right? Ultimately, though, you want to come up with your own theory, your own psychology, your own system, ultimately, right? That matches with your personality, like that matches with how you like to proceed. Are you an aggressive person? Are you a conservative person, right? I'm pretty aggressive. Like in everything I do, I'm pretty aggressive. Like I like to do things in an aggressive way, not crazy way, not a gusha, like, just double down on everything, not like that. But I think I'm a pretty aggressive person when it comes to business, when it comes to investing and trading. So my strategy is pretty aggressive, right? And that's my strategy. This is why I don't do like butterfly spread, credit spreads. I just straight buy calls and puts, because I don't get the maximum amount of result. I don't get the maximum amount of profits, right? Most people, they do like credit spreads, and because they don't know which one is gonna go. Like which way is it gonna go? I don't know, man. I'm gonna buy put and call together and then see which one goes up, right? And then some people always have hedges on because they don't know where it's gonna go, right? I have no hedges on right now. I'm full-blown bullish right now since, you guys know that I've been buying crap load in December 2018, right? And I'm like triple shares. I'm still holding full as of today. I have not closed out one single share of triple shares that I've accumulated in December 2018 and been buying the dips. Obviously, I've been closing out quite a bit of my call options because with this kind of movement, I can't hold those. So I close out my call options up here. I had a call options on Qs, those are leaps, and I also did a journal post on TQQQ. This week I closed all of my call options on the Qs, right? That I've been purchasing here and here and here, right? But I'm holding full. So, and it wasn't like butterfly spread, it wasn't debit spread, it wasn't none of the spreads. I bought straight calls because I want the maximum amount of profit. And so you got to figure out like what kind of trader are you, what kind of investor are you. I don't recommend you being like a day trader. If you want to do, maybe start with a swing trader. Day trading I truly believe day trading is a sucker's game. It's stupid. It's dumb. Maybe start with the swing trading longer term. But longer term is I'm a position trader, as you guys. Position trading means I'll get into position. Usually when I position trade, these are call options and I buy leaps. So they're 1 or 2 years out. You gotta pay a high premium, but trust me, it's worth it. And what I do is I hold things for about 6 months to a year, right? 6 months to a year. So let's say I bought some TQQQ calls here, right? And then maybe I closed half up here, right? That's how I played it. So I bought it here. Calls, TQQQ calls, and then I closed half here, and then I bought here, and then I bought more here, and then I held it. So look, like June, December, and then I closed out everything up here. That's about 6 months. So 6 months, 9 months. That's position trading. Basically, I'm positioning myself before the breakout, right? And I do invest. I'm an active investor, meaning it's not passive investing where I buy shares and then I forget about it for the next 20 years. No, I still manage it on a daily basis actively, but I'm not going to, I'm not going to be in and out of it. Like, so I started actually buying Apple shares in 2018, but I didn't buy it right at the low, man. I actually bought it a little early. Like, I bought shares there. See, I didn't buy calls there, but I bought shares there, right? And then it started coming low, so I bought more. And then 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 I started closing it up here, right? So that's how I did it. And I still have some shares left. That's how I did it. So like sometimes you can't like, I can't perfectly find the bottom. Nobody can. But with shares, it's okay. I mean, what? Like I was down from like 30% down is nothing. Because with the options, I could be down as low. I could be down as low as like 50, 60, 70%. Something were to go wrong. So being down 30% is nothing to me, right? I actually believe that stop loss is a liability. Because if you've been using stops, you probably already learned that it's gonna take your stop and it's gonna go up without you, and you get stopped too many times. What happens is you incur some kind of a psychological damage in your head, in your brain. So what happens next time you get scared to get stopped because you've been getting stopped out so many times, and so you stop trading. And what happens is that things. So let's say you're trying to go long. You get stopped. Let's say you're trying to go long, you got stopped out, trying to go long, stopped out, trying to go long, stopped out, trying to go long, stopped out. And you're like, this thing's stupid, right? And then you forget about it, and 2 months later you come back, this thing's up here. How many times you done that? You guys have all been there. So instead of using stops, what you do is how do you manage risk is you have multiple positions and spread your money out. That way, some position's gonna tank, some position's gonna sideways, some position's gonna move higher. So you kind of offset each other. You wanna look at your account as a whole, not individual stocks, and you start to get depressed every time you see that stock that isn't moving when S&P is moving like at all-time highs. You look at your account as a whole. So I got like so many positions going in my account. Like I got leaps on the these indices that I've been closing out quite a bit heavily, and I got triple shares going, I got individual equity shares going, and I also got, you know what I mean? So I have a well diversified portfolio, and you can see the category of them in my blog at twotradersgolf.com, and I just kind of rotate. So when Apple goes up like this, when I mean by rotate, when Apple goes up, I start closing out my positions. Right? Wait for a pullback to buy the dip, because when things go up like this, like a straight up, like vertical, I start closing out quite a bit, right? And what happened was, like with Intel, I've been buying the dip since 35s, which is here. And I bought this dip, I've been buying this dip, and then when this tanked, I bought more. I've been buying it. And do you know what happened? I actually have, like, my Intel position been pretty much like, I don't know, up 10%, 20% for entirety of like two years. Because it just got up and came down, got up and came down. And then finally when it popped, that's when I saw my Intel position popping with it. But I've been accumulating faithfully, patiently waiting, right? Buying the dip, waiting. I have not closed any of my positions. I did have some leaps that I accumulated here and here, and I closed out half of that today. But so you see, my Intel position was not making any money for so long. Same with my Twitter position. It hasn't been, it's like I'm at like 10% now. Like it's not making any money, but I'm buying the dip and patiently waiting for something like this, right? But I did have spider calls that was doing well. I did have triple shares on all the indices that they were doing really, really well. I have Apple that did really well, doing really well. And then I had AMD that did really well. So I got other stocks that are doing really well, and I got other stocks not doing so well, and I got other stocks completely tanked on me. Yeah. But overall, you see, my account did very, very well in 2019 because I always look at my account as a whole. So I don't use any stop. There's no stop. There's no stop. I have no stop on any of my positions. If I have to get out, I just get out and take a loss. But there's no stop, right? Because I mean, that was the only way to trade Intel or AMD. There's no other way around it. If you're trying to go long, stop that, long, stop that, long, stop that, long, stop that, you're sick and tired of it, you miss that move. Long, stop that, long, stop that, long, stop that, long, long, stop that, 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 and then you're sick and tired of it, it goes without you. Best way was, what if you accumulated and accumulate? That's truly investing is, right? You accumulate it. You have faith in this company. You understand the fundamental technical aspect of this company. You're bullish long term, because if you like Intel price at 57, well, you really like price at 42. Because I really did like this. So I actually very, very aggressively added here and here and here. Because I actually think Intel is $100 stock, even higher. And I've been saying it. Go back on my blog, search Intel, and look at it. My first post. It's like part 7 now or something. I don't know. I forgot. But first post back in like mid 2017, right? My target is $100 stock. This was when it was trading at 35. So I have faith in this company. I believe that chip stocks are going to do really well. And I didn't want to chase some other chip stocks that are already gone up so much. But Intel was perfect for me, right? So if I liked it, I liked this stock at 30, 50s. When it came down to 40s, I liked it even more. So everybody was scared because this thing pretty much went straight down. I was accumulating very heavily, actually. And I bought this dip, I bought that dip, I bought this dip. And then when it broke out, that's when really saw a huge jump in this position. So, well, I didn't mean to go this long, but I thought I'll share, as much as I can in a short time period that we have in this video. Well, you guys have a wonderful weekend, and good luck trading next week.